I was saying that today we are going to talk about published financial statements. So the published financial statements, these are statements prepared by organizations for the publication purposes. So which are these statements which are prepared for publication purposes? So we have an income statement. That is a statement of comprehensive income, as they call them currently. We have the statement of changes in equity. We have the statement of financial position, and we have a cash flow statement. Of which I said, when you are doing the statement of comprehensive income, statement of comprehensive income, statement of comprehensive income. So this one, the expenses are supposed to be classified under various functional heads. So classify expenses under various functional heads. Classify the expenses under various functional heads. So which are these functional heads? We have expenses can be classified under cost of sales. Some expenses will be classified under administrative cost. That is obviously related. We have selling and distribution. Selling and distribution. And at the same time, some expenses like now interest can be classified under finance cost. So expenses will be classified under those functional heads. So an income statement is prepared on a functional basis. So you know how to get cost of sales first. So in some scenarios, remember that you will be given that cost of sales. But if you don't have the cost of sales, remember that we always say opening stock plus purchases minus closing stock. Opening stock plus purchases minus closing stock. Then after that, add some expenses which are supposed to be classified under that, so that you record one figure as cost of sales under your statement of comprehensive income. Are we together? I think. Administrative cost or expense. So administrative cost, these are some of the obviously rated expenses. So all of them, they will be classified under admin. So that you just show one figure. You just show one figure under, under the statement of comprehensive income. Selling and distribution, the expenses which facilitates the sales which the company is making. Like now commission you pay to your agent and so on. Finance cost, interest related expenses. The next you talk about now. So these are about the income statement. So the income statement, expenses are classified under functional heads. Then now statement of changes in equity. That is the next statement. Statement of changes in equity. Statement of changes in equity. What you need to know is what about the format. Statement of changes in equity. Changes in equity. You need to understand about the format of statement of changes in equity, of which it shows the movement of equity components. That is from ordinary share capital, share premium. You can have a retained earnings, revaluation reserve, revenue reserve, that is retained profit, general reserve. So movement of all the equity components. So that are the changes in the equity components. So those are the ones you recorded as statement of changes in equity. Basing your argument on the format you have in your soft copy notes. So that format, you need to know it. The next thing, the third statement is all about a statement of financial position. Statement of financial position. So the statement of financial position, I said very well last time, and I'm going to repeat. I said that non-current assets, the one which are tangible, long-term, non-current assets, tangible, long-term, non-current assets are supposed to be classified together. So the tangible, long-term, non-current assets, long-term, non-current assets, tangible, long-term, non-current assets. So they are supposed to be classified and they are supposed to be named as property, plant, and equipment. So the PPE. So I could try during the exam to see that you have not written individual assets, the tangible ones, under your non-current assets, but you have done a separate working. In that statement, you have just written the property, plant, and equipment as one figure, which consists all the tangible, long-term, and current assets. So the other assets right now, the intangibles and financial instruments. So those can be shown individually, which means that you can state them individually in the statement of financial position. So that is a recap. And the in-depth recap concerning published. I said, why are they using these principles? Remember that this is International Accounting Standards 1. These principles of hiding the information like now when you are doing an income statement, statement of changes in equity, and statement of financial position is now to protect the organization from competitors. Because if you can be able to publish your statements, remember these are the statements which are being published after they have been audited in the magazines. And this is where investors rely to make investment decisions. And at the same time, competitors are accessing your statement. So you are trying to hide information from the competitor. That is the main purpose of doing this way, these statements. So that is the published International Accounting Standards 1. You can go and read more about it. That is IS 1. That is the theory part. If you want to research, you just go to your online library, International Accounting Standards 1. You will get every information, but this is what you need to know in a nutshell. And that is fine. So for today, we are supposed to do a question of May 2015. We are supposed to do a question of May 2015, which I'm going to display on the other side so that we can be able to read, understand before we tackle. So that we can be able to understand. So let me open the question. So the question. So I'm going to display. So I think I scanned this question and shared to you guys. So at the same time, you have the copy. You have that copy. You have the copy. So anyway, I'm displaying it on the other side. That is the one. So there we go. So this is a question of May 2015. Question 1. They say that the following trial balance was extracted from the books of Marks Limited. I think it's clear. I need your response. I think it's clear.
Yes, it is clear.
Yes. Then I said that you mute once you speak. Mute. It's okay. Mute yourself. All right. So the following trial balance was extracted from the books of Marks Limited, a company quoted on the Securities Exchange as of 31st March 2015. So this is all about the trial balance. Trial balance, you know what it has. It contains a lot of items there, of which you know, incomes, expenses, and so on. Not even so on. It contains incomes, expenses, assets, and liabilities. You know that. It contains assets, liabilities, expenses, and incomes. Because like now I can read very fast. You can see we have land, machinery, equipment. We have equipment, that is, I have talked about it. We have accumulated depreciation, software, inventory, administrative expense, 8% loan stock, financial assets at fair value. We have retained earnings, salaries and wages, maintenance of machinery, postage and stationery, 6% redeemable preference, ordinary shares, share premium, interest on 8% loan stock, disposal of machinery, rent and rates, purchase and sales, dividends paid, account receivable, accounts payable, allowance for doubtful debt, bank and cash balances, directors' remuneration, investment income, advertising, carriage in and carriage outward. Anyway, never waste your time in an exam situation to read those items. You know, trial balance contains incomes, expenses, assets, and liabilities. So our main concern is this additional information. Because obvious a question of published, you can't do it without interpreting your additional information. That is the only topic which obvious you have to start with workings. But you show like now the others, like consolidation, I was just starting direct, then workings we do as we continue with the question. But published, you have to do the workings. You have to. So inventory as at 31st March 2015 was valued at 504, while the fair value of financial assets at that is all about they say. Inventory as at 31st March 2015. Inventory as at 31st March 2015. So you can see you have inventory as at 31st March. 31st March 2015. So 31st March 2015 is when our financial year is ending. So you can see even here the requirement, you are told to prepare an income statement as at 31st March. Even this trial balance is as at 31st March, which means that the inventory you have here is at the end of the year. This 504. These are the end of the year. So this is a closing inventory. With a fair value of financial assets. So why did the fair value? So why did the fair value of financial assets was 185? So the fair value of financial asset was 185. So at the end, as at this date, as at that date, the fair value of financial asset was 185. So we need to check this financial asset at fair value. What figure was there in our trial balance? Go to the trial balance, check. You can see this. You have their financial assets at fair value. It was 180. But at the end of the year, we are told it's 185. So which means that it has increased by 5. So 5 will be my revaluation. 5 will be my revaluation, the one which has been mentioned there. So that is a revaluation gain. Revaluation gain. So that one I have answered already. Number 2. So you need you have to interpret every additional information. Software was acquired during the year and it's being amortized. It's being amortized. It's being amortized over 2 years. Remember, amortization is like when we say an asset has been depreciated, but you can't say an intangible asset like software is depreciated. It's like now goodwill, we say it is impaired. So other intangible assets, we can say they are amortized. Like now, software. That is why they say it's amortized over the 2 years. Software was acquired during the year and it's amortized over the 2 years. So you will check the software and remember that is an expense. Amortization is an expense. You will check the software in the trial balance. This is the one. So this is the 100. So 100 you will divide by the 2 years. So you get 50. So that is an expense. Amortization of software. So remember the expenses I said we classify them under functional heads, either under cost of sales, administrative costs, selling and distribution, or under finance cost. The examiner was very specific. He told you that amortization, you can see there, amortization is classified as a cost of sales item. Is classified as a cost of sales item. So that 50 will be added to the cost of sales. Next, accrued administrative expenses and the salaries and wages as at the 1st March 2015 amounted to and 42, amounted to 11 and 42 million respectively, while prepaid rent and rates amounted to 12 million. Accruals and prepayments. Remember that accruals are current liabilities. Accruals are current liabilities. Prepayments are current assets. That is a thing you need to understand first. So an accrual is something which has not been paid by the end of that period. So obvious, it has to increase the relevant expense. So if you are given admin, like now here they say accrued administrative expense, and the salaries and wages was accrued by 11 and 42 respectively. We need to check the admin expense, the administrative expense itself was which value. So if I go to my trial balance, I can see we have admin of 29. We have an admin of 29. So I need to add back the 11. So because this is an accrued administrative expense, it has not been paid by the end of the period. That expense has not been settled. So the 29 in my trial balance, I will increase with the 11. I will increase by 11. The same with salaries and wages. Salaries and wages is here. Under the trial balance, you can see the 31. It's 31 or 298. It's 298. So the 298, I have to increase. I have to increase with this value, which was accrued. This 42. So they will increase. That is what I was saying. They will increase the respective expenses, but at the same time, the 11 and the 42, they are current liabilities. The same thing with prepayments, but the prepayments are current assets, and at the same time, they will reduce the respective expenses because something prepaid is something which has been settled in advance. So like now here they say why rent and rates, the prepaid one, prepaid rent and rates amounted to 12. So I will go to my rent and rates in the trial balance. I will go to the rent and rates in my trial balance. I think I can see it somewhere. Rent and rates in the trial balance, it's here. So rent and rates in the trial balance is this 282. So the 282, I have to reduce, I have to minus this 12 before I do what? I classify the rent and rates where it's supposed to be under the functional end, either under cost of sales, administrative cost, selling and distribution, or under finance. Before I do that, I have to adjust the 12 by subtracting. Then the 12 itself is a current asset. Number 4, a machine was sold on 1st April 2014 for shillings 29 million. The initial cost of the machine was 60 million and the accumulated depreciation was 16. So the initial cost was 60. They have said a machine was sold on 1st April 2014 for shillings 29. Initial cost of the machine was 60 million and accumulated depreciation was 16. What you do there, remember this is a machine which has been disposed. So since a machine has been disposed, we need to get if we got a gain or we went into a loss. So we have to do a disposal account to determine gain or loss. To determine gain or loss on dispose of the machine. Number 5, building are depreciated at 2% per annum using the straight line method. Rent comprises a third of the cost of rent and the building. Machinery and equipment are depreciated at 30% and 20% per annum, respectively, using reducing balance method. So you have the building, you are told building are depreciated at 2% per annum using straight line method. Rent comprises a third of the cost of rent and building. Machinery and equipment are depreciated at 30% and 20% per annum, respectively, using the reducing balance method. Remember these, friends. When you are talking about depreciation methods, the common ones they use is the straight line method and they're reducing. So in order to use the straight line is whereby you just check the cost of that asset. Like now the building at cost, you multiply with the percentage, like now 2%. But what about reducing? For reducing, to get the depreciation for the year, you have to net accumulated depreciation from the cost. So which means that reducing, in order to do reducing balance method, you take the cost of the asset, you minus accumulated depreciation of that asset. After getting now your figure, you multiply with the percentage you are given in order to determine depreciation for the relevant year. Number 6, allowance for doubtful debts is to be increased by 4 million. Allowance for doubtful debts is to be increased by 4 million. Allowance for doubtful debts is to be increased by 4 million. So which means that allowance, remember that when we talk about allowance for doubtful debts, like now let's say, give you an example. Currently, if you can go to any bank, any financial institution, let me use a financial term. If you can go to any financial institution for a lending, for a loan to be specific, like now a bank. So once they give you certain amount, let's say they have decided to give you 10 million, the bank will use various models. They have models to project out of this million, which they doubt you might not pay. So they use a model to project out of the 10 million, you might not pay 1.5. So that 1.5 is supposed to be provided immediately. They are supposed to make a provision. Making a provision is setting aside the 1.5 together for that amount you might not pay in the future. So that's why IFRS 9 comes in. You go and read IFRS 9. It's a current standard in the market. So this is the allowance. Allowance for doubtful debt is to be increased by, that word by is very important. They can say this to be increased to or by. So an increase in provision of doubtful debt is an expense. A decrease in provision is an income. So you can see like now it increased by 4. It increased by 4, which means that the increase is an expense. Therefore, if they could have said it's increased to, so of which, if you check your trial balance, you have a certain allowance. This, you have an allowance for doubtful debt. The 8. So if they could have said it was increased to, let's say 2. If they could have said it was increased to what? To 12. It was increased to 12. So we have a difference of, it was increased by 4. So the increase, I've said that the increase is what? An expense. The increase is an expense. A decrease is an income. So you consider that in the income statement. Then now, remember that it was increased by 4 to where? 12. So this 12 must be subtracted from your debtors, because obviously it was a provision, because you doubt that this amount might not be paid. So this 12 must reduce your debtors. You have to reduce your debtors. It must reduce your debtors. So I think you understand that. Eh? So the total now 12 is the one which is subtracted from debtors, or they call it receivables. Then we have a income statement. That is not income statement. Number 7, income tax. On the current year, profit is estimated at 58. So the current year tax is 58. Administrative expense include an under provision of tax for the previous year amounting to 3. So admin include some under provision. When they say under provision, remember that, for example, now last year, the previous year, they were supposed to pay 15 million. Last year, they were supposed to, that is an example I'm giving. Eh? They were supposed to pay 15 million as tax. They paid 12. They paid 12. So you can see they under provided by 3 million. Eh? So that is the same thing they are talking here. So the previous year, there was a tax of 3 million. They never paid. Eh? So they under provided tax, which means that it has to be paid this year. It has to be paid in now the relevant year. So what you will do here, you will take the 58 plus 3. 58 plus 3, you have 61. 61 would be my total tax for the current year, of which this 3 was included under admin expense, of which I have to subtract from that admin. The next expenses are to be not expenses. Number 8, before I talk about the expenses, number 8, audit fees amount to 25 million is to be provided. So audit fees, you know, that is an expense which will be classified obvious under administrative. Then the examiner went ahead to say that, he went ahead to mention that expenses are to be apportioned as follows. So we have some expenses which will go to the cost of sales. Some will go to the admin. Some will go to the distribution. So the ones, they are very specific: sales and wages, depreciation on building. We have depreciation on equipment, and we have rent and rates. So any questions so far? So good. Before we go for the computation now, before we start the computation, by starting with classification of the expenses under the functional heads. That is the first working I have to do. And that is the only major working which was under this question. So once we are done with the classification, you would be okay to present your statement of comprehensive income, which is very simple. Then we do the statement of financial position as told down there. Any question, any query? Maybe where you never understood, because I want to use the 4 minutes which are remaining to handle your questions before we enter for another session of calculations. So if you feel, you can feel free to ask. As I take a cup of water. Yes, choice. Joy.
Yes.
Any question? Any clarification you need from what I have explained before we do the question?
No, I think I'm okay.
Steve?
I'm okay. I'm following.
Then we have Emily.
I'm okay.
So I will end the session, then log in again. We start now the computations. So these are our normal online classes, which are obvious done during the evenings. And that is okay.